Hi, this is Joseph. It is Thursday, February 26, 2015. I apologize for the delay in making this video. Today was a family birthday and I was busy after work with this birthday party, but I wanted to review one of the last trades that we executed with the trade copier, which was here on the euro dollar. And I did receive some emails regarding what the actual setup was here. Let me go back to that location there. And we've been talking about over the past couple of weeks, a couple of days, that there is this range of consolidation here on the euro dollar. This is the 1 hour time frame. I mentioned a few days ago, I believe it was back Tuesday approximately, that there was a resistance point in here. And I'll go ahead and sort of pull and compress the charts and pull everything back so that you can take a look at what I'm talking about, and then I'll open it up and we can see in complete detail what I was doing here. So we had a range of consolidation, several different lows. It's pretty choppy in here. HL30s are usually the most effective in a situation like this, or reversals like that T2 pattern. But again, as I said many times, that if the consolidation range continues for several days, and in this case we can see that it's gone on for quite some time, I'll get some reversal signals, but if they're not at very specific or significant support or resistance levels, they may not be as reliable. They might set up a signal, but they could turn around and come back the opposite direction. In other words, maybe a bounce off of support. And then you really don't know with some of these levels. It's difficult to really say where it's actually going to stop. So again, the best thing for me, at least the way I interpret it, this information, and the way I like to try and trade it, is to use that HL30, wait for the rollover. But then again, if it continues, I'll stop using that HL30 because eventually one of them is going to fail, and I just would rather stay focused on as many possible winning trades as we can get, instead of just trying to more or less gamble and risk trading opportunities. So I'm going to go and open this up one click here and detach the charts, and we'll go to the continuation signal candle that developed back a couple of days ago. So here was a range of consolidation. Now it's still in overall consolidation if we were to step back and also to look at the 4 hour chart, but this was a pretty significant high and a significant low here. The range was appropriate to wait for that continuation breakout signal candle. Remember, a range that's too tight, let's say 50 pips or less from the high to the low, that is a range that's too tight. And if a 1 hour candle closes outside of that range, it could lead to a potential head fake. That's one other method of identifying the optimum environment to try to eliminate any potential head fakes. It's not foolproof, but it does help. And then the other we talked about this in the last video, or yesterday's video. The other way to also help prevent getting into head fakes is to use that 3 pip entry. So if I do have an appropriate range of consolidation, meaning that the high to the low, it's appropriate for this technique, and then I get a signal candle that breaks out of that range with indicator confirmation, the next step is to, that's just the signal, but the next step is to wait for the 3 pip entry. So even if the next candle doesn't provide the 3 pip entry, I sometimes have to wait 3, 4, 5 hours. It really depends. If I never get the 3 pip entry, then that also helps me from getting into a potential head fake, which is what we saw here. So I did not go long that pair. Now, at that point, it was just a matter of waiting. There were a few different opportunities during the London session where price was moving down, and then it looked like it was going to continue. I was looking for a possibility of selling it below this support here. That didn't happen, and then it bounced, pulled back up. So it was a mess. But ultimately, I just decided to just wait it out. Usually, it's sometimes frustrating to just sit on your hands, but if you can see where it's going, but you're not getting clear signals, from my opinion, with my experience, the best thing that I can do is just wait. If I wait long enough, but I'm there and I'm present, I'm going to eventually get an opportunity. It will give me a signal. I just don't always know when it's going to happen. It might happen during the London session as a result of economic data where price is then moving around. So it's sort of, and I hate to use this analogy, but it's like sort of jockeying into place. Things are starting to move around and it starts to create some positioning, but also with some structure that I understand. And then it starts to then fit into some of these trade strategies and these techniques. It's just a matter of waiting for it. And that's what happened eventually this morning, and I got this breakout where we were able to trade a continuation signal candle below support. So here was the actual signal. Let me go to that candle there. I apologize for this. I'll go ahead and bring this up. So here again, I got the same signal as we did a couple of days ago to the upside. This one printed to the downside. Now, the next question is often, and I receive this quite a bit, they'll say, Joseph, with all this movement, price has already moved all the way down here. Don't you fear getting into a trade like this and looking for a 55 pip target and using a 55 pip stop loss? Because obviously the potential here is that price could pull back quite significantly. I mean, there's a big distance to cover here, and 55 pips in some people's opinion could be a little premature. I need to take into consideration the price swing high that created all this activity. If you just go back 4 candles, here's the high. But that is in most cases over 55 pips. Sometimes it's even over 100 pips, and I don't want to risk something like that. It's not necessary. This is what happens with the continuation breakout trade. If I'm using the appropriate consolidation range, the move or the activity, whatever it is, whatever that catalyst is, whether it's economic data, sentiment, rumors, statements, whatever it is that's going to support that direction, it will continue. Traders will continue to participate. There are also stops that are placed at certain key support levels that haven't been triggered in quite some time. And that reaction is going to create more movement, and it's really hard to stop it. It's like that, trying to stop a moving train. It's not going to happen on a dime. It's going to continue to move, and it's going to stop slowly. There's going to be plenty of momentum afterwards to participate in this move. That's what the continuation breakout trade does, as long as I use the right support and resistance levels. And you can see that this support level here was in place for quite some time, and as a result, I got my 3 pip entry on the next 1 hour candle, and I was able to earn approximately 52 pips on this trade. Obviously it went down a little bit lower, but it is the opportunity, it creates an opportunity for me to capture most of that movement. So it is, again, a very safe trade. I very rarely see price test. As far as how deep I see a test once I get into a continuation breakout trade, if it's going to test that 55 pip stop, sometimes it will go as deep as maybe 35, 38 pips, but that's not very typical. Usually, again, it is as a result of economic data, stops being triggered, a lot of momentum, and it's going to be easy to gauge, and we see very little retracement, and it works. And it works like this on almost all currency pairs, as long as, again, you're using the most significant support and resistance. It's very easy, of course, because there's so many different choppy levels in here, to use the wrong location that might not create that opportunity. This one here, this support level here, is very obvious. I mean, we saw price spike, bounce, and move straight back up, and at that point everything sort of moved inside of that range. We were trading inside of that overall trading range that lasted just maybe 2 or 3 hours right here. So it was pretty significant when that event actually took place. This was a spike low on the 20th, with a low here at 1.1278 and that high at 1.1429. That was a pretty significant range. So that was more or less the last trade. Right now what I'm doing is trying to determine whether or not I want to take any of these HL30s, these bounces off of the support. Most of the times, in most cases, when I see a good move like this, I can trade the bounce and their small retracement for a 20 pip trade on the HL30. And then other times, if the move was significant and the reason for it to be moving lower is strong enough where I could feel that, or I can see on the larger time frames that it might go even lower, then I'll stay away from trading the HL30s. They might work if I was to trade a retracement, but I don't want to risk it if there's the possibility that it might move up only maybe, let's say 12, 13, 17 pips and then come back down and not reach that 20 pip target. I'll just stay away from it because it's going, again, it's going to give me an opportunity between now and the New York session to identify a very solid trade where I'm not going to be doing any guessing. I just let the market do its work. I just get on the same side as momentum and let it move. And carry us to our profit target. So this was a really good trade. It worked out really quick. Not all continuation breakout trades are going to work as quick. In other words, where they reach their target from the time we get into the trade. Sometimes they'll take 3 hours. Sometimes they'll take 5 hours, 7 hours. It really depends on the market activity at the time. But there was quite a bit going on this morning, and it was a very safe trade to get into. Even though we're using a slightly larger stop loss compared to the HL30, And but again, the pay is also a lot more, 52, 55 pips approximately. Now, I closed this one manually. It was bouncing around quite a bit. There were several trading platforms that were freezing because price was moving so fast. They weren't keeping up with some of the data, so it was sort of moving right through that final target that I was looking for. And some of them went to 53, others hit and closed at 52. So, but the target was 55. Generally, it's 55. And in a situation like this, I really don't want to trust that brokers are going to close those orders with price move. Sorry, with price moving so fast. I'm trying to read at the same time. I've got some pop-up messages here, and I'm going to get to all of my emails in just a few minutes. I apologize for not responding right away. But again, we did have a birthday today, and I appreciate your patience. And I will be going back to my regular trading schedule through the Asian session. And we will get an opportunity. It's just a matter of waiting for it. I am looking for opportunities here on the Euro Yen, maybe some reversals there, and I'll be watching the Dollar Yen closely through the Asian and London session.